programs that are also available statewide. Okay, so those particular products that we're going to be talking about today that I'll be covering are the ones that are in Pima County. But just so you know that there are all over the state different programs that piggyback to the MCC program, because that program is available statewide. So a lot of you are familiar with home funds, CDBG funds, WISH, PTHS, things like that. Those are all different products. So we're going to touch on them lightly just because there's so many of them and each of them have specific details, but we're just going to cover quickly a little bit about each just because we want to make people aware that these programs do exist and that there's a lot of funding available. So we want, people to take advantage of the down payment assistance and the tax credit program, which will help them once they are in their home. So we're going to start with the Pima Tucson Homebuyer Solutions. This particular product, local assistance offered through Pima County Industrial Development Authority and the City of Tucson Industrial Development Authority. It's considered a loan product, so your home buyer would work with the mortgage company to obtain this assistance. The assistance is offered either unassisted, there's not assistance, but you get the rate that belongs to that up to 5% in down payment assistance. So your home buyer works with your lender to determine which product works best for them and how much money they actually need. Another reminder with all these different products that I'll be talking about, they can be layered. So later on, we'll be giving you some examples of being able to layer these different programs to get all the assistances, which make housing more affordable. So a little bit more about the PTHS program. It's available to both first-time homebuyers and repeat homebuyers. There is a minimum credit score, so they will get that. They work with their lender on that particular piece. And then there is an income limit of $126,351. So this particular product is something a lot of your home buyers end up going with because they tend to exceed the income limits of the other programs. So this is kind of the go-to product because the income limit is pretty high and there is no purchase price limit. So that's the benefit of using this particular program. It's available in Pima County, including the City of Tucson. Here we put the website. It's PimaTucsonHomebuyers.com for participating lenders. Okay, so very basic information, but just kind of giving you the details of these other requirements. But what's most important with this one is the income limit and that there's no purchase price limits and they would obtain this assistance through their mortgage company. And most mortgage companies participate in this program. Okay, this program has been around since 2010, maybe 2016. It's been around a long time. And so what CIC's role in this particular product is we wire the assistance to the title company. So we're involved and there's been millions of dollars that have gone through this program, which is a benefit because it's through Pima County and they just keep funding it and it just resources through as people sell their homes, things like that to keep the program going. So this is definitely a good program that's been available and it's been available and still available. The next product, okay, so the one, before we get into this one, the PTHS program is Pima Tucson Homebuyer Solutions in Pima County. There's an assistance for rural areas that's called Home Plus, and in Maricopa, it's Home in 5. So those are the identical programs, just depending on which county they're in is going to determine which product they get in, but the lenders are pretty much universal and they work in all three. The next two products I'm going to be talking about are targeted towards your lower income home buyers. Okay, and the one I'm going to start with is the Home program. It's referred to as Home, and this funding is available through Pima County and the City of Tucson. And the big plus about this is it's currently 20% of the purchase price. Now, when there's a purchase price limit of $302 or $306, so when you're looking at a price limit of or a price of $300,000 house, 20% is $60,000. Okay, a lot of money just in this product. So when you're putting down 20%, another benefit of the reason it's so high is because when you're putting 20%, you can try to go into what they call a conventional product and eliminate mortgage insurance, which has a monthly premium and to buy-in, a buy-in premium, which can be pretty expensive. So something to talk about with your mortgage company is if I'm coming in with at least 20%, am I able to eliminate mortgage insurance, which is going to save you a lot of money monthly and in closing costs. Now, a little bit more about the home product. It's available to both first-time home buyers and repeat home buyers. However, at the time of purchase, they can't own a home. So if they currently own a home, they would need to sell it before they purchase this new one, okay? Normally your rule is on other products is first-time home buyer. What a first-time home buyer means is I've not owned a home in the last 3 years. This particular product lets you own a house up until the very end. You just have to sell it before you get into the home product. The assistance is in the form of, there's a lien that gets put, a silent second lien, and it's in the form of either 5, 10, or 15 years. It depends on how much subsidy you're getting. So for instance, if you're getting more than $40,000 in assistance, there's going to be a 15-year lien on there. What that means is if you sell within the first 15 years, you're going to be paying back that assistance, however, whatever you got it. And it comes from the proceeds from the sale of the home, okay? Now, the home buyer and the spouse must attend an online home buyer education course prior to getting into a purchase contract. Okay, so that's an important piece from this particular product, the home product, because a lot of times people are starting to seek down payment assistance once they're in the process. If they're already in a purchase contract, they won't be able to get into this home program. It says the home buyer must obtain home approval through a participating nonprofit. Okay, so now you're bringing in another party. You're currently working with a realtor, you're probably working with a lender, and then there's CIC, who's the funding source if they're getting the tax credit program. And now you have another nonprofit where your home buyer would go seek this particular assistance. Right now, currently, these are the nonprofits that are participating in the home program. You got CPLC, Chicanos por la Causa, Family Housing Resources, which is FHR, Pima County Land Trust, which is Geraldine, who said hi to us at PICLET, PCCLT, Biodecimo, Primavera, and Administration of Resources and Choices, also known as ARC. Okay, all this information you guys will find on our website. Also, at the end of the presentation, you'll have a link to our website that talks about all the products and to get you to all these particular nonprofits. The home program has income limits of 80% or below of median income. So in this example, you'll see for a family of 1, this particular person cannot make more than $45,500. Now this is household. So if we're talking about a family of 5 being mom and dad, 2 kids and grandma, the family of 5 cannot exceed $70,150. So if grandma is part of that family size and grandma is getting Social Security, you'd be counting that as income towards the entire home, okay? So that's another thing is when your home buyers are looking to get qualified for these particular products, they all have their different rules, but this one is household income. So however many are gonna live in that house, of all those bodies that are gonna live in that home, which of those have income, okay? Now, the WISH product, okay? So home was one product, which is 20% of the purchase price. The WISH program matches 4 times what your buyer can contribute with a max of $29,000. So you'll see here, if they're able to contribute $7,250 towards the buying process, WISH will match that 4 times and give them an additional $29,000. So here, in this case, there's $7,000 already into the deal plus another $29,000. Okay, so now we're looking at $36,000, $37,000 just in this product. Okay, home had potentially $60,000 if you're at $300,000, and then here's another layered product. Okay, so right now, as people are layering all these products, and we'll show you an example later, it ends up being a lot of money, and we see it because we see the wires going out. You know, that's where a lot of people aren't aware that these programs actually do exist. It just takes a little bit of work on your home buyer side to get qualified and make sure they meet the requirements to be able to get these assistances, and then start layering them, and then, you know, go through the buying process. I put on here the minimum contribution is $2,000. So if the buyer is only able to give $2,000, which the $2,000 is usually in the form of earnest money, home inspection and appraisal, they usually already have 2,000 into the deal regardless. So if they do qualify for WISH, they will have 2,000 coming in, and then the 4 times match is 8,000. So the WISH will give them 8,000. So they can, whatever they can contribute gets matched 4 times. So what is WISH? The home buyer is required to contribute, again, at least $2,000. It's an assistance in the form of a 5-year forgivable. So this one, if you sell your home in the first 5 years, you pay whatever they matched back. And then it's available through local nonprofits. Okay, so right now, some of your local nonprofits are FHR, Biodecimo, Pima Community Land Trust. They are participating in the WISH program, similar to the nonprofits through your home program, just not all of them are doing the WISH because they work with the member bank that offers this funding. The mortgage does not have to go through that member bank in some cases. So as a lender, they can still stay with who their lender is. And then it may be combined with other forms of assistance. However, with WISH, the funds are limited. Now, funds are typically available after April 1st, and they continue through August, September. It just depends on how quickly it gets utilized or how much money people come up with. If they're giving everybody $29,000 because they came up with the $7,000, then the funds are going to go faster. Homebuyer education and counseling is required for applicants, and the homebuyer must be a first-time homebuyer, also known as not owned a home in the last 3 years. Okay, so these are, again, are just a few things to kind of keep an eye out, but the WISH follows similar income limits as the home. And so they're off about, their WISH is maybe about $1,000 less, but more or less it's about 80% of median income. So they follow the same income guidelines. And they will work with the nonprofit to get qualified for this also, similar to the home program. What we like to see, or what we typically see, is if they're working with the nonprofit to qualify for home and there's WISH funding, they typically get qualified for both of them while they're there, okay, if the funds are there. So those were some of the down payment assistance. Again, these are the local products. There is home in Maricopa County. There's WISH in Maricopa County. So again, it's going to take a little bit of work and research on finding who's the nonprofit that has the products for your lower income home buyers and make sure they meet the income guidelines. And then the Home Buyer Solutions product, which has the higher income limits, again, is available everywhere. And all these assistances can be combined with the tax credit program. So that's just something we always recommend. It's just a big plus all around, which we'll be covering soon, but it's everyone should get an MCC, you know, in the buying process. If they qualify, who doesn't want $2,000 every year once they're in their home? Okay, so we just flew through down payment assistance. I think I'll go ahead and stop for a minute now and see if anyone has any specific questions regarding down payment assistance. Again, these are just minimal information regarding each, and there's flyers, there's information on the website with more details about each one of them. I just wanted to explain to make sure they understood that the WISH in the home is a local nonprofit, and then the Pima Tucson Home Buyer Solutions is through the lender. It's a loan product. Okay, so that's where your home buyers apply for these sources, but they should definitely look into all the sources available, because even some mortgage companies have their own products. You know, they have a first responders product. There used to be essential worker funding, nurses, teachers, you know, so there's different products that your local lenders or your mortgage companies also have available that can also be layered on top of the programs. So just make sure your home buyers are doing their homework. And it's great that I have lenders and realtors willing to learn, because you're going to have those home buyers that are asking those questions, and those home buyers like to work with people that are aware of all the programs that are available. Okay. Anything in the chat? We're good?
We're good.
Great. Okay, so we're going to get into the MCC program, and that is, again, something that's offered through the Pima Industrial Development Authority, Pima County IDA. This particular product has been around since 1991. I have actually been administering it since 1995. Before most people on this call were probably born. I have to put that out there every time. But yes, it's definitely a program that just had its 30-year anniversary in 2021. And so we had our first group of home buyers that got into the program, you know, paid off their mortgage, got through the product, and closed up that anniversary. So it is something that's been around since 91. It's always had funding. It's not something that ever runs out of funds. And I currently have funds through the calendar year of 2026. So money there is. We're definitely doing a big push right now to make sure we don't leave any money on the table, okay? Because we can issue a ton of certificates all over the state, okay? So what is a mortgage credit certificate? Okay, so an MCC allows borrowers to claim this tax credit to reduce their tax liability, saving them money. Okay, again, we're just gonna keep this pretty simple, but we actually did a video on the last session on here's a tax return. This is exactly how it's going to work. So we go into all those details to make sure the buyer understands what they're signing up for, essentially. So what it allows the home buyer to claim 40% of the interest they pay up to $2,000. And later on, we'll talk about the difference between the deduction versus a credit. These credits be claimed year after year as long as the borrower lives in the home. So that's another important piece that people miss is they think, you know, we're buying a home, everybody gets to write off their interest as a deduction. This is in addition to that. This is an actual tax credit, and it's good for 30 years. So they can be claiming this $2,000 for the life of their loan. If for some reason they don't utilize the program, so for instance, during COVID, some people didn't work, they were not filing income tax returns. And if they had the MCC actually rolls over for 3 years. IRS lets them roll over the credit for 3 years. And then refinancing is allowed, okay? Because that's going to be a big piece, hopefully next year, if rates drop. You know, I don't have a crystal ball, but, you know, rates are coming in at 6 and 7 right now for at least about a year now. And we're hoping, you know, next year they do drop and you're going to have everybody refinancing, okay? So it is allowed. So if they do get into the program and it carries over to that new mortgage. And then applicants must apply prior to closing. Okay, so this is an important piece because people aren't aware that this program exists and it's been there for 32 years. It's just, we're working really hard right now to get the word out, just to make sure people understand that it is something that's available, that's always been there and it's not going anywhere. But you do have to apply prior to purchasing the home. Okay, you can't get in if you refinance, anything like that, is apply prior to closing. Okay, so I appreciate you guys being here to help spread the word, to just make sure, hey, you have this potential home buyer, just look into the program, you know, and we can, you know, do all the work. We'll work with them to explain everything. So here's a little bit more on how I explain, depending on who my audience is, how the program's going to work. So the first box is when I'm talking to your home buyers, because I know this is a low amount, but I do it for math purposes. When you have a loan amount of $125,000 at 4% interest, this person's going to pay $5,000 in just interest alone. That $5,000 they can use as a deduction. Anyone that has a mortgage, okay? IRS currently gives us a standard deduction that's so high that people don't write off their home interest anymore, okay? For instance, a married couple, the standard deduction this year was $25,000. So if they don't pay more than $25,000 in interest, they're not going to write off their interest as a deduction. So that's where people tend to get confused or be like, oh, you're not going to benefit or you're not going to use it. Even tax preparers say that to our certificate holders, okay? That's not the case because this particular product it's 40% of the interest they pay as a tax credit. So they get the deduction in addition to the tax credit. So in this example, 40% of that $5,000 is a $2,000 tax credit. And the reason I put this $2,000 figure is because they're capped at $2,000. So anyone that has a home or a mortgage more than $125,000 or an interest rate higher than 4%, they're going to be getting capped at the $2,000. So we typically say that the credit is a $2,000 credit for the life of the loan. Now, when I'm talking to your lenders, this is a big added bonus because it's saving a lot of deals right now. Okay, we are having one of the highest producing years we've had in 15 years at least. okay? So what your mortgage lenders can do, especially right now in today's market, is they can look at that $2,000 tax credit, they divide it by 12, and they can actually consider that additional income. Okay, so that 166.67 is additional income your lender can actually plug into your loan application as additional income. There's a drop box that actually says mortgage credit certificate. And that additional money will help with either qualifying for more house. Okay, maybe they qualify for 280, and maybe that 166 means they can buy a $300,000 house. Or maybe they qualified for that $350,000 house when the rates were 5%, but now that they're 6%, they don't qualify anymore just because of that 1%. A lender can plug in that 166 and they now qualify. Okay, so it's just one of those magic things that let's just put it in and see if it works. Again, we don't want it just to be saving deals. You know, we want everybody to utilize the program. There wouldn't be any reason, unless they don't qualify, to not take this product that's going to be there for the next 30 years. So that's where it benefits your lender, is being able to actually make that deal work. You know, maybe they have too many debts. Maybe they have to start counting student loans now. And so this 166 is going to offset those kinds of things that show up. Now, when we're working with your home buyers, we will show them on their tax returns the difference between deduction. This is the interest that you pay. This is where it kicks in under the deduction section, unless you're using the standard one. We're going to show them where the credits kick in. So it's similar to a child tax credit. But then we're also going to show them, currently, we see on their tax returns how much money they're having taken out of their paychecks. And most people are getting refunds, and it's typically because they overpay. So for instance, I do that myself. Take out the most you can just because I don't want to owe IRS at the end of the year. I'd rather get a refund. And yes, I know they're making interest, but it's just, I feel better about getting a refund than to trying to find money to come up with. Now, what we tell the home buyers is, now that you're going to have this tax credit, you don't need to have as much money taken out of your paycheck. Okay, because this tax credit is going to help what IRS is looking to keep. So if they're getting this $2,000 tax credit and they're paid bi-weekly, they can go adjust their withholdings. Usually we say you can take home $80 more a month per paycheck. Okay, so that's, again, $160 per month, which is going to help make that mortgage payment. You know, that's another plus. It's like, okay, not only are, you know, you're going to get this usually on, you're going to see this on your tax returns, but because you have this credit, you can take home more money now, which is going to make it easier for you to make your mortgage payment. Okay. Or if you want to save it and wait and get the refund, then maybe you want to use it for home improvements. You know, you bought this home under a certain condition, and you know you're saving to try to do something, or that AC goes out. We can't be without AC in Tucson. Okay. You know, and that's not cheap. So things like that is, maybe that's going to be something we're going to be using these refunds for. And then when we're working with your realtors, you know, that extra income equals more house. Again, that was the, I qualify for 280, but this tax credit might be able to get me to find a home for 300,000. Okay, so that's where it's important that your lenders are aware of the program, because, you know, it's like, okay, the deal's falling through, or I need that extra $10,000. If they can plug in this 166 and it works, they just saved the deal. Okay. So that's how the MCC specifically works, depending on who our audience is and who we're talking to about how it's going to benefit themselves specifically. Okay. I talked a little bit about the difference between the deduction and the credit. Again, the deduction reduces how much IRS is going to tax you on. But again, they give you such a high standard that you're going to probably take the standard. So the credit is actually reducing your tax liability. Like, here's $2,000. Okay, so it says here, which is better? Your credits are better. Okay, and again, you're probably not going to be deducting anyway, but it's like a win-win. There would be no reason to not take the program. Here, there's a quick chart when we're working with the home buyers. It's kind of small to see, but on average, what we typically see on a $200,000 house at 5% interest, someone that is planning to stay in their home, they're looking at saving on average $50,000 worth of credit. Okay, that's That's easy. That's like a given. But your home buyers typically will stay about 10 years or so. And if they're getting $2,000 every year, even if it's for the next 10 years, that's $20,000 for a program people aren't even aware existed. Okay, so now you just signed them up for something that they didn't know it existed, that's been around for over 30 years. And you're the one they're going to remember when they're getting their refund, or when their tax preparer says, where did you learn about this program? Like, the tax preparers don't even know it exists, you know, so they're gonna be like, oh, my realtor told me about it, or my lender signed me up. So it's definitely one of these products that you can keep that referral or that connection, because they're gonna be like, this is the person that got me into the program. Okay, so we definitely appreciate referrals. Again, plenty of funds and staff, you know, to process this, and in the application process is very simple. What we also show your buyers over on the right, which is kind of small, you have a loan amount of $275,000 at 5% interest. What we'll show them here is year 1 through 30, which your lenders will show when they itemize, you know, they're showing them amortization. We show them, okay, here, you're going to be paying this amount of interest in 2023, a full year of interest, we'll say. You know, you're going to be paying $13,000 worth of interest. 40% of that is the $5,000 figure. However, the program caps you at $2,000. So that's where we start showing them on that column there, on the 4th column. Once you start adding these $2,000 credits, that's where you're going to see that $50,000 credit over the life of the loan. Okay. And again, we sit there and we'll explain this to your home buyers. Once they become homeowners and they're in the program, you know, we send out newsletters, we do videos. We are looking into bringing back free tax preparation just to make sure the program is getting utilized, because people aren't aware, or they sometimes even think it's scam. Okay. So the program geography, okay, the program is available anywhere in the state of Arizona. And again, it can be combined with all down payment assistance, all loan products. There are what they call target areas. Target areas are referenced as economically distressed areas. And these particular products, these particular areas are determined by census tracts. There's certain census tracts that are considered target. And if your buyer happens to be buying in this target areas, they get better benefits. They don't have to be a first-time home buyer. Their income limit and purchase price limits are higher. So buying in a target area is definitely a benefit. We have on our website the list of the target areas that are considered census, and we have this really cool map that I'm not going to go into. We have a whole video that walks you through the process, but I don't want to keep you guys past our hour, and we got more to cover. So again, this target area, you can put in the address and it'll take you right to the area and say, it's this census tract. It's yellow if it's non-target, it's green if it is target, or vice versa, but those are the colors. Yeah, the green is non-target. So you'll know if you put that address in, you'll zoom in and it'll tell you target, non-target, or if you zoom out, you got the whole state. So you can look at, okay, this particular pocket is considered target. If you're going, you know, to Buckeye, if you're looking in Maricopa, there's some pockets in there. So that's where this map is beneficial, because if it's like, maybe I want to start marketing in these particular target areas, because the benefit of being able to qualify is better. You know, you don't have to be a first-time home buyer. The price limits and the income limits are higher. So here's the eligibility. Okay, so when you're looking to qualify for the MCC program, first thing you want to look for is that they're a first-time home buyer, or that they've not owned a home in the last 3 years. There are 2 exceptions. Okay, if they're a veteran or if they're buying in a targeted area, they do not have to be a first-time home buyer. Now, the program works with all home types: single family, manufactured, condos, duplex, townhouse. Okay, we always get asked that. And then all loans. So every FHA, VA, USDA, conventional, any down payment assistance. We don't get into the loan product. We try to stay out of the closing process altogether. We just want to make sure they apply prior to closing, because again, this benefit they see once they're in their home filing tax returns. There are household and purchase price limits. Now I have this big bright star in there because we have been notified that the limits have gone up but they haven't released them to us. So it's not officially, you can, start using the higher numbers. But an example here, you'll see for Pima County is going to be your top box there, where it says all AZ counties except for Coconino, Pinal, Maricopa. So if you have a family of 1 or 2 and they're buying in a non-target area, you'll see that the income limit is the 82.8. Now, if they happen to be buying in a target area, because remember the benefits, they incentivize for buying in target areas. In a target area, the income limit is 99. So you'll see there, it's a big difference of what you qualify of the limits once you start buying in target areas. And then a family of 3 or more and a non-target is 95,000. So those are higher numbers. Now what we're seeing, or the estimate we've seen, is that these limits should be going up approximately $10,000. So in Pima County, the family of 1 to 2 is at 82.8. They're looking at 93. And then now when you get into family of 3 or more, you're looking now at 105,000. So those are generous income limits. So those should be going up by about $10,000. You want to make sure you sign up at the end of this presentation. You want to make sure you sign up, get our newsletters, things like that, because that's when you'll be told, we'll release the information, we'll post it on social media, follow us on social media and such, because that's where we're going to be announcing these increases, okay? And then the purchase price limits will also be going up, which is a big plus, because that's definitely what's hurting the program currently in Maricopa County. Because for instance, in Maricopa County in a non-target area, the limit is 367. Okay, I don't know if you find anything under 400 in Maricopa. So those are expected to go up at least 100,000. So we're happy that now all the now all the purchase price limits will be in the 400s. So that'll help us get more people into the program. So right now in Pima County, the non-target is 350,000. And if you're buying in a targeted area, it's 427. Okay, so again, the benefit of buying in a target area is much higher. Okay, so that's the qualifications. When you're looking at, okay, I want this program, will I be able to qualify? These are the main things we're looking for this particular page. Okay, is the first-time buyer, income limit, and purchase price limits. That's exactly what we're looking for to see if they qualify. Okay, so we talk about how to share with interested home buyers. Now, we understand it's hard to explain this benefit, okay? I mean, even now, it's hard for me to explain it, and I've been doing it for almost 30 years, okay? So it's what's the best way to make everybody understand, your home buyers, your lenders, your realtors, local nonprofits, people that get in front of the home buyers, okay? So on our website, you'll find a video, that says a quick little 3-minute video that is like everything we're talking about right now in an hour. And then it also talks about what the income limit and the purchase price limits, and you'll also see on there once they increase. And we're hoping to hear, I was told tomorrow, so we're hoping that it's going to be available next week. I'm assuming for sure by the 1st of July, if not by the end of June. All the information on the website, including the documents, is available in Spanish. Okay, so that's up there. You look what language it is, and the whole website will change to whatever you need, including all the documents that need to be downloaded, and including our staff. And then the contact information for our helpful staff, and the ability to schedule a one-on-one appointment. Okay, you're gonna find all that on our website. And then through our email, there's an email that's just for MCC and staff, and a phone line, everything just for MCC. And we have a script that goes out that talks about, here's the website, here's the video, here's the application, here's the video that how to fill out the application. Everything you need to know is available in even our social media. Okay, we're trying to make it as simple as possible. They can schedule an appointment, they can walk in, and somebody will sit down with them and explain the program. Okay. So that is MCC. Okay. I'll take any questions we have on that before I go over a couple things left. 141, so we're doing pretty good, but we're zooming by pretty quick, so hopefully it's not be too confusing. So any questions, anybody, chats? Nothing? Cool. Either everybody's listening or they stop listening or they're taking notes. I'm doing just a really good job. So they know exactly what they're doing. We're going to go with that.
Hi, it's Natasha. You're
Hi.
doing a really good job at explaining. I appreciate being here and you explaining about the information. I just have a question. So is this only for Arizona, for the state of Arizona?
We personally only do the state of Arizona, but
Okay,
these programs, there's one in Nevada. There's maybe 5 or 6 other states, but not all the states. But
okay.
there's just a handful of states that do tax MCCs anymore. Not a lot of them do.
I love it. I
Good.
feel special. Thank you.
Thanks, Natasha.
Patty, we have a question in the chat. It says, at what stage does one have to start the process?
So they can come anytime they want to learn about the program. You know, they can visit the website. We can show them on their tax returns exactly how it's going to benefit them. They can't actually submit an application till there's a property. So they have to be in contract to be able to apply, because we're looking at purchase price limits and making sure the home is in Arizona. But they're welcome to at least get information or watch the video to see how it works, or bring their taxes and be like, I want you to tell me exactly how it's going to benefit me. And then your lender, you know, they're going to know also by them coming and making sure they meet the guidelines. So that way the lender can plug that money in, that 166. You know, sometimes the lender just wants to be reassured that you are going to qualify. So they can come anytime, but they can't actually submit an application until they're in contract.
Thank you. There's another question. It says, also with COVID-19, are qualifications of W-2s unchanged?
What the W-2, I don't know if that is a mortgage question, like if you're applying for a mortgage or you use W-2s to file your income tax returns. That's how they determine what your income is on the 1040. So I'm not sure.
Yes, when applying for a mortgage.
Okay, yeah. So right now, as far as I know, your lenders are collecting W-2s. Some don't collect tax returns. They may collect just 1 year. So that would be a lender question. I mean, if you're self-employed, they look at it differently. But there's usually have to provide some form of evidence of what your income is. But it doesn't have to be W-2. You could be self-employed. So they'll look at your different sources. You could be on Social Security, and that will be your source of income. So hopefully that addresses that question, maybe.
Thank you, Patty.
Patty, there's another question. Is this credit going to be used against or towards their income for AMI calculation?
It is not. So because the lender can plug that 166 as additional income, it's not real money. It's not real income. The buyer still sees the credit on their taxes. But because the buyer has the ability to go change their withholdings and take more money home per paycheck, they can count it as income. But no, when they're qualifying, so AMI, whether it's 80% when you're getting home and wish, AMI is the income limits. The lender can actually back it out, or whichever program you're applying for, they subtract it because it's not real money. It's not a wage.
Another question, can the credit be used toward property tax directly?
No. So property taxes is your property taxes. If you have a mortgage, your property taxes are being paid through your mortgage. They're collecting that. It's part of your mortgage payment. So no, this particular credit is a tax credit on your tax returns on your 1040, not state, federal income tax returns, and that's where you're going to get the refund. But if you have a mortgage, it's getting paid out of your mortgage. If you don't have it paid out of your mortgage, which you should, hopefully with that refund, that $2,000 refund, then you can go pay your property taxes.
Thank you.
All right. Good questions. These are all new questions. This is exciting. This is our third quarter. So they're getting more and more exciting every time. Okay. So we've covered the down payment assistance. We've covered the MCC. Again, our website is very helpful. I know we are in the process of updating it. You know, it's getting friendlier and friendlier. The same with the application process. So we just wanted to give you guys a couple of examples of client experiences. And we like to share this because people just, again, are not aware of the programs. And we see them because, again, we wire the money. So we know they're real. We know they're real people. And these programs, once you start layering them, they're very beneficial. Okay, so on your first example here is Ivan, and he's a family of one. And his income, or their income, is $28,000 a year. Now, minimum wage right now, $13.85 in Arizona. If they're a full-time person, that's about what it is. It's $28,800. Okay, your minimum wage full-time, $28,800 would be what your income would be. So this is single person making minimum wage. Now, Ivan received $31,000 of home, okay, because it's 20% of the price. And then the $29,000 of wish, which means Ivan was able to bring in the $7,000 to the table. Okay, so now you add that money. And then also receive the MCC, which helped with qualification. So total, you know, we're looking at least $60,000. Now, after their contribution, and if their salary contributed, and home, if they got the full 20%, they're eliminating mortgage insurance, which reduces their monthly payment. So at the end of the day, their payment is very much affordable. This minimum wage single person can afford that house because of all these programs. Okay, again, it happens every day. And it's just doing the work. You know, it's doing the work to see if I qualify and getting approved for the programs. Your next example is Ramona, okay, family of two. This particular household makes $44,000 a year. Okay, the limit for a family of two is $52,000. Okay, so they did qualify. They received $34,000 in home, and then Pima Tucson Home Buyer Solutions. Okay, they received $3,224, and then they also received an MCC. Because what we try to do is we want to make sure everybody's aware of all these programs, and if you're already doing the work and you qualify, you should apply for everything. There's no reason to not, if you qualify, there's no reason to not apply. Okay, because this is just money that gets left at the table. So total, you'll see this particular person is over $37,000, because we don't have $37,000. There's few of us that have $37,000 sitting in the bank and let's go buy a house. Okay, so definitely utilize all the programs available. Now, Nico, family of four. Okay, Nico's income, the household is $50,000. Now, $50,000, you might have two minimum wage earners and two kids. You might have one person, $50,000 salary, and three other bodies that don't have income. You know, that's when you start looking at household. Everybody's structured differently. Okay, so maybe it's a single parent. Maybe it's just a single income house. Nico received $22,000 in home, $20,000 in wish. So Nico was able to come up with $5,500, okay, to be able to get or $5,000, 5, 10, 15, 20, $5,000. Maybe they only had the $5,000 to put into the deal and still were able to get the $20,000 and also received an MCC. So total for them is $44,000. So before I move on to that, I just want to, just let people know these are real things. They do exist. We see them every day here at CIC. Again, just do the homework, find the nonprofit. Again, if they meet the income limits, find the nonprofit and qualify for all the programs. Otherwise, Pima Tucson Home Buyer Solutions is a loan product. Stay with the lender and get down payment assistance there. Okay. The home ownership team. Okay. Exciting, very busy right now. and they're doing a great job on just keeping it going. You know, it's a little stressful, but you know, we're pushing through it. So also on the call is everybody here, but you got Mario and Suzanne and Jess. Those are going to be your main contacts when you are working with the home ownership team. Again, the MCC has its own email, website, phone number. They are in the office. You know, if anybody wants to come in, you know, and look at their tax returns, someone's always available to go through the process. If lenders want training, if realtors want trainings, we're available to go out to them. We have added, or we're looking at adding staff to help in do even more MCCs. Okay, you know, so like right now we are at 300-400 issued so far, and we're only in June. You know, we have a new goal of we're going to issue 1,000 this year, and so now we have additional staff that's going to help us do that. You know, and a lot of them are on the call today, so thank you guys for joining us. You know, it's beneficial to learn about all the programs that are available, and that way we have everybody on board on how are we going to make this program even more successful, because there's a lot of money available. Okay, so again, I do appreciate everybody attending. And on here, we got our QR code. Now, this is something, you know, we're definitely trying to get everybody signed up, because you can get more information. We're not going to be looking for you for anything. You know, we're not trying to gather anything from you. We just want to make sure you're on our list, so that when those income limit and those price limits go up, you get notification. Or if we're doing the info session, we do these every quarter. You know, we might send out a survey and be like, do you want us to do it more often? Do you want us to talk about something else? Do you want us to just present? The last time we presented the session, that was in April, was specifically on tax returns. Let's look at the tax return, and this is exactly how you claim this credit. We went over the 2022 tax form. Again, everything gets recorded. We share it because you can go back and watch it, you know, because taxes are confusing. So you want to sign up for our newsletters to get our emails and such. Again, thank you for your time. It's 1:53. We'll leave a little bit of time for questions, but for more information or to schedule to meet with the team, or for us to go out to you guys, you know, we at this point will go anywhere. I love road trips, and to go talk about the program and do lunch and learns, anything you're looking to do. If you're doing home ownership fairs, there's a home ownership fair coming up through the Land Trust, Pima County Land Piglet. And so you'll see us at all different events, and we usually have booths, but we are available for any questions. So anybody, we will be closed next Monday, and then 4th of July, so Juneteenth, and then we'll also be closed 4th of July, that Tuesday. So those are back to back, so that's in the next couple of weeks. But yeah, we're available if you have any questions. I don't know if anybody has any questions now, but I do appreciate you guys hanging in there. But yeah, that's it. So we